and welcome back everybody to another one of our videos. My name is Abed. I'm one of the VIP account managers here at the company, and today we bring you a very interesting video yet again, and we're going to speak about a new binary option trading strategy. But before we get into it, I just want to remind you guys that if you do like our content and you want to see more stuff, you can like and subscribe our channel. And if you have anything that you want to recommend for us, that you want to see, you can leave them down in the comment section below. Okay? So without further ado, let's get into it. Today we're going to speak about the Bollinger Bands and RSI binary option strategy. Now, previously we did make a video about RSI, and we mentioned that experienced traders usually tend to combine the RSI with other indicators in order to have better predictions. So to get into it, first of all, we've got what is the RSI? Just a quick brief. This is how it looks. It has the green line is basically called an overbought level, the red line is called an oversold level, and the purple line is the RSI line. What it is, it identifies potential upcoming changes in the overall trend direction. It identifies overbought and oversold levels. It is a momentum-based indicator, which means it reads the strength of the certain trend and it tells you potentially if it's going to reverse or continue. And it is a leading indicator, which means it is one of the indicators that can help you analyze the market and make a prediction towards an entry or an exit point. If you want to know more about the RSI details, you can go back to our previous video where we spoke in more detail. We spoke about more details about the RSI. And next up, we've got the Bollinger Bands. What are they? This is how they look like basically. The upper band represents high upward volatility, while the lower band represents high downward volatility. As you can see, the red and the yellow one. And the middle line is a moving average. Now, the upper and lower bands are also moving averages, but with a deviation for it to read for us the volatility of the market. Contraction of the bands indicates low market volatility, while expansion indicates high market volatility. So basically, when the bands are closer to each other, it means that the market does not have too much volatility moving in it. You can interpret it in a way like maybe there's not too much interest or maybe not too much trading happening at this period of time. And when they expand, they go further from each other, it means that right now there's a lot of trader being happening. But it just tells you if there's, if I may say, interest in trading, but it does not give you the direction for it. But how we can use it in combination with the RSI to know our direction, we're gonna find out. So basically the strategy, first of all, the setup of it. Candlestick time frame, you can use it at any candlestick. You can use it 5, 10, 15, 30 seconds, 1 minute, whatever you're comfortable with. Binary options expiration is 8 to 10 candlesticks. So keep in mind here, we're not telling you 8 to 10 minutes or 2 minutes or 5 minutes. It is always 8 to 10 candlesticks, depending on the time frame of your candlesticks. So basically, you realize what is the time of each candlestick, and then you multiply it by the number 8 or 10, and you will find out exactly what the expiration that you should select. Bollinger Bands settings are from 20 and 2. And then we've got the RSI, it is on default settings. This is how it looks like basically. This here is the Bollinger Bands, showing us the volatility in the market. And down there is the RSI reading for us the momentum of each trend. Okay, Bollinger Bands up here, RSI down there. How to use the Bollinger Bands and RSI? Now, a buy trade may be placed when, as we can see here, the price action breaks out of the lower band. You can see it circled down below. And at the same time, we've got the RSI. It crossed from below the 30, it was already below the 30, giving you the signal that it is already oversold. And it's also crossing upwards. So it's very similar. Both of them are giving you a similar signal that it crossed the low, it went below the down instant, and it's now going back upwards. This is how we understand when to place a buy trade, because it's already oversold and we want to buy. Now, how to use the Bollinger Bands in a sell trade. A sell trade may be placed when the price action breaks out of the upper band. As we can see here, it's similar to the previous one, but in opposite direction. It broke up of the upper band and is going down inside it again. At the same time, we've got the RSI is moving from above the 70 line. It's moving from above the overbought and going back inside it. So it's very similar signal. Both of them were on already above the top level and going back inside. And now this is how we understand we open a trade to sell. How to use them. Now we can go to the platform, okay? So basically, as you can see, it's already set up. Let me just show you quickly how you can set them up. So remove them from here. Now, the RSI, we go to indicators. Now, we mentioned that it is a momentum indicator. So we can either find it in the momentum here, or we can also find it in the popular. So this is one of the popular. It's usually down there. Or we can just write it in the search for indicators here, RSI, and there it is. We applied and we said it's going to be on the default settings. Applied, and now we see here we've got the overbought level is on 70, as we can see here the number, and we've got the oversold, it's on 30. These are the default standards, and there's the RSI line. Now the next indicator, it is the Bollinger Bands. Same thing again, we can find it in the volatility, since it is a volatility indicator, we can find it in the popular, or we can just write there Bollinger Bands. Now keep in mind, it's not this one. Again, it's a volatility. So it's this one. It's very simple, it's very popular. The period though, we said we're going to change it and we make it 20, okay? But the deviation is going to stay 2. And then we apply it. This is how the masterpiece looks like. Now we can find potential entry points. Like for example, here we have a very recent one. The price action, it crossed outside of the Bollinger Band, outside above the upper line, and then it went back in. Same time as it was going back in, we can see that the RSI was giving us the signal, and we can interpret it. Now this signal was a bit delayed. Usually the signal that you wanted, it is happening at the same time. Now I found another example which is quite recent around here. Let's see how it looks like. So at this point, here, we saw the candle exit the upper line of the Bollinger Band, giving us the signal that it is going to be, if you can call it a reversal or a pullback in this trend, so we can basically sell at this point. And I looked at the RSI and it gave us the same signal at the same time. You see it's on the same candlesticks. It was above the overbought, above the 70 line, and went back in. So we opened the trade here and it went back down. Same thing at the end of this. Now there was a big momentum here, so it continued going down. We can see it exited outside of the Bollinger Band. It went below the 30 line, and at the same time here, it went back in on this candlestick, and the RSI also went from below the 30 level, went back inside the channel. So this was also our signal to open a trade to buy. Now keep in mind, we said you can use any time frame. I was using 30 seconds. Now the expiry is between 8 to 10 candlesticks. So let's say this was our signal. We opened it here. This is the first. 2, 3, 4, 5, 6, 7, 8. This is on the 8th candlesticks, 9, 10, and we're still on the profit line. Even though it went a little bit sideways, but this is how it goes. This one worked. This one was a little bit sketchy, but it still worked at the end. And this is basically it. It's simple. Practice makes perfect. You've got the practice account, guys, for you to use it. Let's go back to the presentation and see what we have next. How to set up, use the setup to find convergence and divergence. Now, this is a part that I mentioned in the previous video when I was speaking about the RSI on its own. Now we're going to speak on it again and see how combining it with the Bollinger Bands with a different indicator can help us improve with it. So basically, convergence happens when the price action and the RSI move in the same direction. Okay, divergence happens when the price action and the RSI move in opposing direction. a possible momentum change could be imminent. So this is basically a bullish convergence. As we see here, the price action is giving us higher highs, and at the same time the RSI is giving us also higher highs. Like with each high, the peak of the RSI is becoming higher. So this indicates for us that a trend continuation is possible, and as we can see here. The bullish divergence is basically, we can see here, the price action is giving us lower lows each time. You see on each peak it's becoming lower, and the RSI itself, each peak it's having is becoming higher. So they're going in opposite direction. But we drew a line here on top of these peaks on the highest points during that time frame. We connected them for us to understand where is going to be our entry point. Okay. So what we did here, using basically the RSI, we understood that a bullish divergence is going to happen. We waited for the entry point. The moment it crossed above the white line, we entered our trade to buy. Okay, and at the same time, if we look here, we can see at this point the Bollinger Band combined with the RSI gave us a sell signal. So we bought here, we went up, okay, and then the Bollinger Bands gave us a signal. So the moment this happened, it went outside and it went back inside, and then we see the RSI was above the overbought, and then it went down again below the 70 line. We switched the trade and we ended up continuing to sell here. See, using both of these, we can take multiple trades, for example, in a short period of time. We can find multiple opportunities. Combining them will also help us understand if this trend is going to have a momentum for it to continue, or if it's going to reverse, so that we have, let's say, better chances of understanding when to open a trade and in which direction. As we can see here, because of the bullish divergence, it did continue going up as well, but at the same time, because of the Bollinger Band, we managed to take another trade in the opposite direction. And then we've got the bearish convergence. Same thing, we've got here, you see these lows are becoming lower, and then the RSI lows are also becoming lower. They're moving in the same direction. It also interprets for us that the bearish trend is going to continue in the same direction. And then we've got bearish divergence. Similar like before, opposite direction. We can see here that the highest points of the price action are becoming higher, and the highest points of the RSI are becoming lower. So what do? We drew the line here, and then we waited for the exit. So the moment it happened, we switched direction. Instead of buying, we went into sell according to the RSI and these bearish divergence. Okay. How to use them? Let's go now again to the platform. Let's see. So here, okay, let's take a look here. Basically what we need to find high points. Okay, here for example, we've got two high points on the RSI. Here they've got one on the RSI, and here we've got one on also on the price action. Two high points, this high and this high. This basically, because they're moving together, if we draw a line to make it more clear for us, we draw a line like this, and we see the line is going in an uptrend, and these peaks are becoming higher. So this basically tells us it is going to be a bullish convergence. So the trend is supposedly to continue in a bullish trend. But at the same time, we see that the candlesticks are outside. Now, I gave this example previously, but you can see that it went back in and it didn't fully continue uptrend. So this takes us back to the point that, again, these indicators, they do not account to market news. They do not account to events that are happening in the real world. They are basically moving according to technical information that is happening on the price action. So it is very important to use the practice account, to take it to your advantage, try practice these strategies. You can even, if you want, test with the settings of them, change maybe the deviation, but basically take the strategy, practice it, and see if it's going to work for you guys. And this is basically it. I will wish you all the best of luck, and I hope to see you on the next video. Good luck.